you just want to take a conservative view, take the global financial system and the banking system and the auditing system, $3 trillion in revenue a year. If Ethereum captures 0.1% of that revenue, it would be worth about $4,000 a token. If it captures 1%, it would be worth $40,000 per Ethereum, per Ether. And that's a 20x from where we are today. So like that's very clear, and that's only one use case, right? And because it's a platform, it can, like 6 months from now, we could be talking about some entire new case we couldn't have imagined and estimated right now.
How's it going, everyone? It's Sam. We have to cover the price prediction or the pricing model for Ethereum by a recent ARK analyst. So he was recently on Daily Investing, and he talked about Ethereum. He talked about other cryptocurrencies in general for about an hour and a half. I'd really suggest going and watching that video if you're interested, but I wanted to make it a little bit shorter, talk about some of the really important parts of that interview here today, because it is a long interview and I know some people can't watch it. Now, there are timestamps below. I'll just give you that right up front, but I would suggest watching the whole thing because there's a lot of good information in here, and I only included the most relevant information. Now, Ethereum has gone up a lot even since this interview. I think when they were talking, it's around 2,000, and that was less than a week ago. Now, just today, it's up 11%. Now, I talked about it on my Twitter recently. If you guys want to follow me on Twitter, you definitely can. I talk about how a lot of people think that it's really expensive, but a lot of people thought that at 2,000. Also, the fact that Apple can't even spell Ethereum. Whenever I type it in, it always goes to ethereal, is probably a good sign too. So you guys can definitely go check out my Twitter if you're interested in that. Also, there is a link down there to BlockFi. One of the things they talk about is getting an interest rate on your crypto, and especially on stablecoin. So on BlockFi, there's something called GUSD, which is where I hold some of my money. It pays 10% right now, 10% APY. It pays you every single month, and it compounds. So pay attention to that. If you guys are interested, they're giving up to $250 away in Bitcoin for your deposit bonus, depending on how much you deposit. And they give an interest rate on Ethereum and Bitcoin too, so definitely check that out down below if you're interested. Also a link down there to Webull. Now, just a little background on the guy that's actually talking here with Daily today. He was an analyst at ARK Invest for about 6 years. He worked at NVIDIA as a product manager and an editor-in-chief for 9 years. He's been very successful. Now, right before we get into the actual video, if you guys don't mind just hitting that like button and hitting subscribe if you haven't done that already, let's get into it. So the first thing that they want to talk about here today is what actually Ethereum is. A lot of people have their hard time actually getting their head around it because Bitcoin's easy. It's like digital gold, but this is how they explain Ethereum.
Basically, Ethereum captures fees for using it. I think it's helpful to maybe just walk through kind of what Ethereum is, right? I think it's still a very vague concept for a lot of people. I find that it resonates better when you talk about Ethereum as, don't worry about this cryptocurrency nonsense. It's just software, okay? And you can write applications to it. And you know what? If you're a software developer, you can, and you know JavaScript, the language for Ethereum, which is called Solidity, is very similar. You can deploy an application in a weekend. And once they can see that, they don't have to. You don't have to argue about supply and tokenomics and all that stuff. You just treat it as kind of a place where you can deploy useful applications.
Now, the next thing that they actually talk about is how to handle volatility. How do you handle volatility in the crypto market?
In crypto land, this kind of price movement, 5-8% on a given day, that's nothing. That's like the cloud passing over New York. It happens all the time. It's like if you're worried about if this shakes you out, you should not be in crypto, because this will happen every couple of weeks or days sometimes. And when it really tanks, like we're talking 30-40% down in a single day. So if that doesn't sound like your cup of tea, stay in the S&P 500. Netflix reported earnings a couple of days ago, and I think it was down like 8% after hours. And the headline was like Netflix crashes or tanks after poor subscriber additions in the guidance. And I'm like, oh my God, it must be down like 20%. So I can check it. It's down 8%. I'm like, oh, so it's just like typical intraday move in crypto. This is like no news. Move on.
Then they go into his asset allocation because he is pretty heavily invested in crypto. So this is how they break it down.
Sure. In the liquid component, I tweeted this out a couple of months ago. It's 70% crypto, about 30% equities. There's some cash, but it's so small. It's like I can't see it on the pie chart. So I am majority crypto right now. I mean, any asset allocation is kind of like you're weighing the options available to you right now, right? So in terms of liquid allocation buckets available to you, you have fixed income, which I think is not interesting to most of the listeners on this show. You have equities, which I hold, a reasonable amount because I've been investing in equities for the last 10 years or so. But when allocating new capital, you kind of look at, and there's of course crypto. When you're allocating new crypto, allocating new cash, you're trying to ask yourself which of these have the best risk and return profiles. And when I looked at a couple of months ago, it was at fixed income. I'm not going to touch. Equities is just extremely expensive. Even if you believe in all the great narratives about tech, it is still very expensive. Part of the reason why software and tech has done so well over the last 5 years is because 5 years ago, if you're investing in that stuff, the valuations were expensive for the time, but not crazy expensive. Like if you bought, say, Salesforce, one of the great, very stable growers in the last 10 years, you were paying 5 to 7 times revenues. Today, the multiples are higher, and across software like SaaS companies, the multiples 20, 30x very easily. So when you are expensive to begin with, for it to go up, it's just a lot more difficult. It's not saying it's not possible. Could you invest in tech names and still double your money in 5 years? Yes. Could you 5x your money? That's much harder. But the last 5 years, of course, with the benefit of hindsight, you did and you could. So you have to kind of look at where you are in terms of base rates and how much people are paying for it now.
Next, he compares Ethereum to something that's of similar market cap that's in the tech sector.
One very simple kind of reason why I'm just comfortable with it is that let's just look at two very well-known names, Salesforce and Ethereum, right? Salesforce is roughly speaking a $200 billion company. Ethereum is a $200 billion protocol or cryptocurrency, if you will. Would you rather own Salesforce or Ethereum for the next 10 years? I would rather own Ethereum. That's just my personal take, right? Because it's Salesforce is tens of thousands of people badgering you to subscribe to stuff and use software that Mark Benioff is literally kind of shoving down your throat at times. Great company, great product, and obviously added a lot of value to the world. But it's kind of a done story. Whereas you have Ethereum, which if you look at it, the addressable market is literally the entire financial system, and it is literally practically day one of Ethereum. Ethereum is not, Salesforce is a software product or a constellation of software products, whereas Ethereum is a platform more akin to the internet, and stuff is built on top of it. Very few things are built on top of Salesforce. Yes, there are some app integrations and things like that, but generally you don't have an economy that is diverse and interesting on top of Salesforce. In Ethereum, there are entire companies, applications, economies being built on top.
The next question is really important. How do you actually value Ethereum?
Without getting too smart, you can just kind of look at the TAMs, right? Salesforce is effectively billing itself after sales and marketing teams and the kind of business operations teams. It's strictly a piece of kind of the spend of a company, and it's one vertical, right? It's they've expanded a bit, but substantially it's one vertical. Whereas Ethereum's TAM is open-ended. There's, in a way, you can't value it because what it can do is completely open-ended. In 2017, we weren't sure what Ethereum was able to do. We only had this idea that this could be a new kind of computer for the internet, a new platform for the internet. But we had no idea. So all kinds of ICOs, initial coin offerings came out, and we had stuff from DentaCoin and weird things that didn't make any sense. Over the last 2 years or so, two use cases actually have emerged for Ethereum. One is this thing called decentralized finance, or what people call DeFi, basically using Ethereum to do things that banks used to do, borrowing, lending, and things like that. The other one is NFTs, non-fungible tokens, where essentially any artist now has a piece of magical software that allows them to mint unique and scarce digital assets. We could never create scarce digital assets prior to, practically speaking, Ethereum's kind of NFT technology. So now we have these two things. If you try to value Ethereum 3 years ago, you couldn't have come up with any of these because you wouldn't have known ahead of time that they were going to be invented. So narrowly speaking, you could value Ethereum's opportunity in terms of the scale of the financial system if you just look at DeFi, and that's roughly speaking about $3 trillion a year. That's the amount the global banking and auditing system it generates per year, about $3 trillion. Arthur Hayes did this amazing analysis on his blog. Everyone who's interested should read that. I think it's the best single piece of kind of top to bottom kind of thesis for Ethereum with a framework for valuation, and you can read it in 15 minutes. Arthur Hayes, we can link to it. But yeah, like basically it's like if you just want to take a conservative view, take the global financial system and the banking system and the auditing system, $3 trillion in revenue a year. If Ethereum captures 0.1% of that revenue, it would be worth about $4,000 a token. If it captures 1%, it would be worth $40,000 per Ethereum, per Ether. And that's a 20x from where we are today. So like that's very clear, and that's only one use case, right? And because it's a platform, it can, like 6 months from now, we could be talking about some entire new case we couldn't have imagined and estimated right now.
And the last thing I want to cover are the benefits and use cases for retail investors to hold crypto, and what's going to actually get more retail investors in crypto.
Lending is by far the most no-brainer activity you can do, because just the number of people who have a bank account is in the billions, and the number of people who would be interested in earning a above inflation rate return on just your savings is everyone on earth. So you could argue that's a TAM of 7.5 billion people right there, and Ethereum would do that for you today, right? So if you have $1,000 and you want to earn some interest, if that's lingering in your bank account, that's earning less than 0.5% interest. You can shoot that $1,000 to Coinbase and convert it to a stable coin, so like USDC. These stable coins are not speculation instruments. They're pegged to the US dollar. So one for one, you turn into $1,000 USDC, and then you deposit it into one of these crypto lending platforms. This is just software again, right? This could be Aave, this could be Compound, this could be Yearn, dozens of options for you. And roughly speaking, it will earn you like 10-15% APY on that immediately. A couple of things different about how this is versus like a CD or a term deposit bank. There's no term, so you can deposit it anytime, you can withdraw it anytime. There's no like limit. Like if you do a CD and you withdraw early, there are nasty penalties and all kinds of nonsense with that. The second one is it's a variable interest rate, call it account. So one day it could be 10%, the other day it could be 12. It fluctuates based on the market demand for this specific stablecoin you're depositing. And the third is to use these pieces of software, these crypto lending protocols. Like if you've ever used any traditional finance software or app, the sign-up process, the onboarding is like the most torturous part, right? It's like provide your name, your social security number. I don't know, can you even open a bank account online? Like maybe go to your branch. It's just like the most onerous thing, because financial products have the most onerous regulation. On these crypto lending and borrowing platforms, you can get everything done without so much as even supplying an email address. No social security, no driver's license, not even an email address. You literally plug in your wallet address. You literally have a wallet, kind of like MetaMask, that's in your browser as a plugin, and you click lend, and then it syncs with your wallet, and then it happens, and you can get this done in 5 minutes.
Thank you guys for watching. I think this was a great interview, and if you guys want, there is that link down below to BlockFi, also one to Webull. If you guys want to know what I'm buying and selling every single day, you can check out the link down below to Patreon. Thank you for hitting the like button, and I will see you guys in the next video. Let me know what you think Ethereum will do over the next 10 years in terms of price predictions down in the comments. Thanks.